China claims imports from the U.S. fell 22.5% in August amid Trump's escalating trade war with Beijing. Chinese customs data released Sunday showed that imports from the U.S. fell 22.5% to $10.3 billion in August and exports to the U.S. fell 16% to $44.4 billion. Unexpected declines came as the U.S.-China trade war drags on. Analysts say sluggish domestic demand was likely the main factor in the import decline, along with softening global commodity prices by a Reuters and Associated Press and Megan Sheets for DailyMail.com published, 5:36 BST, September 8, 2019, updated, 21:55 BST, September 8, 2019. China's exports unexpectedly fell in August while imports shrank for a fourth month, pointing to further weakness in the world's second-largest economy and underlining a pressing need for more stimulus as President Donald Trump's trade war with the nation drags on. Chinese customs data released Sunday revealed that imports from the U.S. fell 22.5% to $10.3 billion in August, while exports to the U.S. fell 16% to $44.4 billion. Beijing is widely expected to announce more support measures in coming weeks to avert the risk of a sharper economic slowdown as the United States ratchets up trade pressure, including the first cuts in some key lending rates in 4 years. On Friday, the central bank cut banks' reserve requirements for the seventh time since early 2018 to free up more funds for lending, days after a cabinet meeting signaled that more policy loosening may be imminent. August exports fell 1.0% from a year earlier, the biggest fall since June, when it fell 1.3%, customs data showed on Sunday. Analysts had expected a 2.0% rise in a Reuters poll after July's 3.3% gain. That's despite analyst expectations that looming tariffs may have prompted some Chinese exporters to bring forward or front-load U.S.-bound shipments into August, a trend seen earlier in the trade dispute. China's exports unexpectedly fell in August while imports shrank for a fourth month, pointing to further weakness in the world's second-largest economy and underlining a pressing need for more stimulus as the Sino-U.S. trade war escalates. File photo. Many analysts expect export growth to slow further in coming months, as evidenced by worsening export orders in both official and private factory surveys. More U.S. tariff measures will take effect on October 1 and December 15. Sunday's data also showed China's imports shrank for the fourth consecutive month since April. Imports dropped 5.6% on year in August, slightly less than an expected 6.0% fall and unchanged from July's 5.6% decline. Sluggish domestic demand was likely the main factor in the decline, along with softening global commodity prices. China's domestic consumption and investment have remained weak despite more than a year of growth-boosting measures. China reported a trade surplus of $34.84 billion last month, compared with a $45.06 billion surplus in July. Analysts had forecast a surplus of $43 billion for August. On Friday, White House economic advisor Larry Kudlow, pictured, said the United States wants near-term results from U.S.-China trade talks in September and October but cautioned that the trade conflict could take years to resolve. Washington increases trade pressure. August saw dramatic escalations in the bitter year-long trade row, with Washington announcing 15% tariffs on a wide range of Chinese goods from September 1. Beijing hit back with retaliatory levies, and let its yuan currency fall sharply to offset some of the tariff pressure. China and the United States on Thursday agreed to hold high-level talks in early October in Washington, the first in-person discussion since a failed U.S.-China trade meeting at the end of July, but there was no indication that any planned tariffs on Chinese goods would be halted, and markets expect a lasting peace between the two countries seems more elusive than ever. White House economic advisor Larry Kudlow said on Friday the United States wants near-term results from U.S.-China trade talks in September and October but cautioned that the trade conflict could take years to resolve. China's trade surplus with the United States stood at $26.95 billion in August, narrowing from July's $27.97 billion. It still reached $195.45 billion in the first 8 months of 2019, highlighting continued imbalances which have been a core complaint of Trump's and his administration's negotiations with Beijing. U.S. Chamber official weighs in President Trump imposed tariffs to another $112 billion in Chinese imports September 1 and plans to extend import taxes to everything China ships to the United States December 15. The two countries are fighting over U.S. accusations that China steals technology, forces foreign firms to surrender trade secrets and subsidizes Chinese firms in a drive to become a technological powerhouse. The Associated Press spoke with Myron Brilliant, the U.S. Chamber of Commerce's head of international affairs and a veteran of U.S.-China negotiations. Answers are edited for clarity and length. Q. What is the state of play in talks between the United States and China? A. We have a president who rightly is trying to address the unfair trade practices that have been identified by previous administrations. But he is taking a completely different approach and using different tactics. We completely are aligned with the goal of trying to address intellectual property theft, forced technology transfer and the whole effort to reform China's state-owned enterprise sector, particularly trying to eliminate subsidies and tax preferences. Where we have differed with the Trump administration is the excessive use of tariffs. We consider the tariffs to be hit on our own economy. Q. In early May, it looked like the United States and China were close to a deal. What happened? A. Chinese negotiator Vice Premier Liu He was given a big rope to go out and negotiate. But he still has to go back and sell it to the boss, Chinese President Xi Jinping. And I think when he went back to do that there was some reticence. The Chinese felt they were being asked to make all these concessions without the U.S. agreeing to eliminate all the tariffs. I think Xi Jinping decided that the deal was too one-sided, which was unfortunate as we were close. Q. Can the two sides reach an agreement or will the Chinese stall in hopes of dealing with another president after 2020? A. The trust deficit is quite high right now, so they need to build confidence. One way to do that is if China agreed to agricultural purchases from the United States as a down payment on what needs to be eventually a larger deal that would protect intellectual property, scale back forced tech transfers and subsidies to state-owned Chinese companies. I think Xi Jinping wants a deal. The question is whether they will wait out the U.S. election cycle because they think they will get a better deal later. I think it would be a huge mistake. Regardless whether President Trump wins or a Democrat wins, they're going to face the same barrage of issues. 16 months from now, it's not going to get any easier. In fact, it might be a lot harder. Let's block ads. Why?